Hi, everybody. It's Al from Boston. Just wanted to make a quick video regarding Citadel Securities and how it all works, give you a background on the company, something a little bit more in depth, and it'll be multi-series. It'll be more than one video, of course, and I'll try to cover as much as possible, as quickly as possible, and let's kick it off. Okay. Citadel Securities, like we all already know this basic stuff, started by Ken Griffin at Harvard. Original name was actually Wellington Financial Group. Their initial capital injection was by a company called Glenwood Capital. They are out-of-the-box thinkers. I know that's kind of a cliche word, but in terms of investments, they find strange and unusual things to invest in, and one of them was Ken. They initially started with 4.6 million in capital, and they just kind of grew from there. They are one of the probably most successful quant strategies driven companies I've ever seen, probably ever will exist, next to Rentec maybe and Jim Simons. But their initial quant strategies were very successful. They're a multinational company. They're in North America, Asia, and Europe. In 8 years, they accrued $2 billion in assets, which is a great number. I mean, that's just thinking about that is just pretty incredible when you think about it. 8 years, $2 billion, and back in the day. Let's talk about the expansion. One of Ken Griffin's thing was, like, he's got this mantra: be the most successful investment team in the world, right? Ken's a very systematic thinker. He takes these really high lofty goals and he achieves them. The first thing he did was building his infrastructure. This goes beyond just owning a building or two, getting a name brand. No. This meant achieving milestones that make Citadel an indispensable part of the Wall Street landscape. Citadel Securities wasn't formed until 2001 and is a market maker. And their big contribution is providing liquidity and trade execution to retail and institutional clients. And that's where we get that dark pool product, Citadel Connect. The securities automation in terms of trading came later on. Lower costs for the consumer, tighter speeds, once again, building confidence and fidelity. Their first major milestone from all the other stuff that they've done was achieving market maker status in 2009. They partnered with the Chicago Mercantile Exchange to create this credit default swap electronic trading platform. This is post 2008. I had been in the works and they finally executed it, and really interesting product. I researched this. It's kind of boring if you don't know finance, but it's the way they're doing it is actually quite genius. But in terms of the company itself, it's the largest maker of options in the U.S., executing about 25% of the liquid equity options available in the United States. I think that's incredible. All the others is just small potatoes. They've continued to grow over the years. They expanded its market making offerings to interest rate swaps, which is one of the most commonly traded derivatives. By 2015, Citadel had become the world's largest interest rate swap traders by transaction, and it replaced a bunch of Wall Street banks, including Goldman and Morgan. Citadel manages 5 investment strategies that include equities, commodities, like energy. They hired a bunch of ex-Enron energy traders as soon as Enron got liquidated. They do fixed income, quant strategies, of course, and credit default swaps. They had an investment banking, not COVID, an investment banking wing from 2008 to 2011, started by a guy, Rohit D'Souza. He was a Citi guy, I think. And they shut it down after 3 years, couldn't get it to work right. They also work with reinsurance. Now, if you don't know what that is, it's insurance for insurance companies, basically. And their main 2 funds was the Capital Source, Kensington Global Strategies, and of course, Citadel Wellington LLC. Risk management. Okay, let's talk about this. The firm's risk management philosophy is based on 3 ideas: risk, capital allocation. How much money can I put in there and how risky is it, right? That's the first thing, common sense. How much stress does it put on the company itself if we are spending this kind of money on a certain play, right? And how much money is going to be left? When you couple those 3, you have an actual strategy. It's a very common sense approach, but the way they do their analytics is what makes them successful. They're constantly moving and shaking. They're constantly looking for new threats. They're monitoring. They're understanding how markets work. Their grasp of capital markets is just it's just incredible. I can't even begin to tell you the stuff that I've read about them, the way they operate. And long story short, they're very good at what they do. Let's talk about the dark stuff, the patterns of misconduct. Now, at one point, let me just caveat this. They were a good company. They were a smart company, but they got too greedy and they started taking really calculated risks by stretching the law, breaking the law, if you will. And I think only what we're seeing is what they got caught for. I think there's a lot more that they did, but we can never prove it because everything's so hush hush and so on and so forth. Let's talk about regulatory issues. So they, over a two-year period of time, 2014, hundreds of thousands of large OTC orders were removed from their automated trading process, rendering the orders inactive so that they had to be handled manually by human traders. Now, what that meant was there was a delay and they could skim the price. They could scalp the price on and make money on there, which is illegal, right? You have to file those things immediately. You have to get them done immediately, and you have to get them the best price, right? That's the FINRA rules. But of course, FINRA doesn't really do their job in terms of, checking in on these people and make sure they're done and auditing the way their coding is. So they just get away with it. Citadel in 2014 was fined $800,000 for irregularities in its trading practice between March 18 and 2010 and January 8th, 2013. So they've been dinged before. They paid another $22 million fine for misleading clients regarding the way it priced trades. So they lied about that. They lied about a few other things. They were forced by the SEC to pay $3.5 million over violations stemming from incorrect reporting. Incorrect reporting. Remember how we talked about in the other videos, incorrect reporting, the bad data? This is what I'm talking about. They've been busted for this before. They're just going back to what they know, what's going to work. And this time the SEC is going to look the other way. How do we beat that? Hold. Look at this. They did it for like, from 2012, 2016, did it for 4 years in 80 million trades. They've accrued a ton of money doing that in 4-year time. Bloomberg reported that 40% of Robinhood's revenues were derived from selling customer orders to firms such as Citadel Securities and Two Sigma Securities. So we already knew that. We found that out later on. So more regulatory concerns. In 2020, Citadel pays 600 million yuan, which is 97 million settlement for trading irregularities in China, dating back from 2015. The Chinese did hold them accountable and they did pay their fine, which is a substantial fine, by the way. They were also fined $700,000 by FINRA for trading ahead of customer orders, the arbitraging. They were delayed certain equity orders from clients to buy and sell shares while continuing to trade the same stock in its own account as part of its market-making activities. This is what they've been doing to us, right? Citadel also was censured by FINRA a total of 19 times for a variety of misconducts, including failure to disclose failure to deliver positions. We all know about that. Naked short selling, we all know about that. And inaccurate reporting of short sale indicators. Executing trades during circuit breaker halts, failing to offer its clients best price and the bid-ask spread. Ladies and gentlemen, that is what you will see and have seen during this squeeze. Take a look at this. Remember this. This is what's going to happen. Circuit breaker halts. Remember how we talked about the halts in the other videos? This is what I'm talking about. And best prices, bid-ask spread. I know I've talked about it. I know our friend over in New York has talked about it. There you go. This is what we're talking about. This is why I've been trying to get this information out because I know what they're doing. This is why this videos and stuff is so important. And this information has to be to everybody. They need to understand what's about to happen to us during the short squeeze. Citadel agreed to a censure by FINRA for $275,000 fine for improperly reporting nearly 500,000 treasury transactions in 2017-2019, revealing a systemic failure in Citadel's compliance system. This is, like I said, a criminal organization. And of course, the GameStop hearing. So they're no longer these guys are criminals. There's no other way around. They're flat out fucking criminals. Forgive my language. They only get caught sometimes, not all the time. Why? Well, it's very simple. It's the Citadel employee. They have a 40% turnover rate, right? It's churn and burn over there, that shop. Guys come in, guys go out. They have ironclad non-disclosure agreements. So if you get called to testify and you talk, they'll go after you, right? Non-disclosures, non-compete agreements. You can't even go work for another Citadel, another company like another hedge fund like Citadel. You have to do something different for like X amount of years. Every conceivable way to obstruct your growth of X employees, they participate in, right? That's what they do. That's why nobody goes after them, because it's the NDA parts. It's very ironclad. Proprietary coding laws. This happened in London. One with another to use one of his old codes, and they got busted. They picked up on it. So that's what happened. And of course, the code is their secret ingredient. That's their meat and potatoes. That's what makes this company run and slime the way they do. It's mostly composed of crime, of course. And these Citadel employees are forever hushers. They never talk about it. They never ever talk about their time at Citadel, because that's how scared they are. Aggressive legal teams. They go after them. But this is what I found out. This is why you can speak out and not get in trouble. It costs them on average $10K just to start paperwork. Like, I guarantee if they were going to start coming after people, they wouldn't be able to, because there are so many people speaking out against them. They couldn't possibly come after everybody, right? So keep that in mind. Keep in mind that they cannot possibly sue everybody if we all speak out together, okay? So this is the first one of the videos, and I'll make some more. I'm going to talk about arbitrage. I'm going to talk about how these guys make money through insider trading. And I'm not calling Citadel insider traders. I'm just showing you guys, how it gets done. I said before, it's an intelligence agency. In the next video, I'll show you how it's an intelligence agency. Alpha Boston signing out.